And I'd like to greet you guys at the top of the morning. And welcome back to another episode of Wealth Wise Guru. I'm your host, John Schaff. It is Monday morning, and we are just at the opening of the bell. And it looks like the portfolio was up this morning by $654. I'm investing $22,594.31 with a buying power of $5,191.96. And so there are lots of opportunities in the market, even though some of you may think it's not because of the market situation. But believe me when I tell you, there are a lot of opportunities in the market to place options, leap options. There's a lot of opportunities to place leap options in the market. Simply because everything is on sale. What I mean by that is everything is down. And so these current prices of what you see the value of these stocks is not necessarily mean that it's going to stay that way, that the value is not going to rise back up. So there are a lot of opportunities to place what I call leap options in these companies. And a leap option is when a strategy is a year out or longer. And so let's look at the values of my stocks this morning and ETFs. And so it's the value of my stocks this morning is $62,228. And it's up by $628. And I have two pendings. Well, actually, I have one pending in the equity side. And it is let's see. XLF. About one contract, and XLF is a financial select sector, SDSPDR fund. The value of it is $52.33. So I bought one this morning. It'll benefit you more if you bought this particular stock, and if you was able to buy or purchase 100 shares of it. So 100 shares of it is going to be $5,233. It's on market value. It's $52.33. So I realize a lot of you may not have that kind of money to invest in the market. This is going to be a wonderful stock to have in your portfolio. It's a index XLF track index of the S&P 500. Financial stock, way by market cap. And so since the market is, this is more like a bond. And so these are all the companies that are in this particular fund. It has financial services, industry, and technology. And here are the stacks of this particular fund. And let's look at the top 10 holdings that's in it. The top 10 holdings are Berkshire Hathaway, Visa, Bank of America, Goldman Sachs, American Express, J.P. Morgan, MasterCard, Wells Fargo, S&P Global, and Progressive. And so you want to definitely wants to have this in your portfolio. Let's see. Let's see. Okay. Okay, since the market is just open. Okay. This is one of these safe zones that you can put your money in and not worry about it. Again, it is a financial select sector SPDR fund, and I just bought 400 shares of it. So the bell had just rung. That's why you see all this stuff popping up on the screen. And so let's take a look at the portfolio again. So it's actually up about $498 and climbing. Okay, this is a watch list position. Let's see. No, actually, this is the put I have in place on 4/17. Let's see if we could sell all of this. Probably don't have enough. Of shares. I'm gonna see anyway. Okay. So that gives me a buying power of $5,885. So it looks like the the market has stumbled, or my portfolio has stumbled to lost $9.91. So I don't know why it failed. So, but I have a first up is this iron corridor. I put an iron corridor in it's a lot of volatility in the market, as you can see. It's kind of all over the place. Let's look at Palantir this morning. So actually Palantir is up by $4 and 69 cents, 64 cents. I have 107 shares of Pioneer, value at just under $10,000. So far, the return today is 500 and climbing. And so this is definitely going to go back up pretty fast. Because in my opinion, it's greatly undervalued. But because the U.S. government is, we have a new president, and even though he's been in office before, he has different policies in place. In Pioneer Technology, what they do is they in the AI sector. And they make different things concerning the defense mechanism of the United States, and so they have a lot of government contracts. And so since the government is cutting back, downsizing, that's what actually made their stocks to decrease in value, because they have simply a whole lot of government contracts. So that's what's making them so appealing. The Pioneer Technologies engage in the business of building and deploying software platform that serves as the central operating system of its customers. It operates through the commercial and government segment. The commercial segment focus on customers working in non-government industries. The government segment is involved in providing services to customers that are the United States government and non-United States government agency. The company was founded by Alexander Cadman Karp, and Peter Andres Thal, and Stephen Cochran, and Joseph Lonsdale, and Nathan Dale Giddings in 2003, and is headquartered in Denver, Colorado. The list name for PLTR is Pioneer Technology. So basically, Pioneer and Technologies has a lot of government contracts, and so by it being losing half of its values, because in a week or so the government decides it wants to downsize. This is going to be a tremendous stock to have in your portfolio, and especially to put yourself what you call a leap options in it. And the leap options is this: you hit trade options, you select your date, and since it's going to be a leap, we want to go out to, and then we are into a new month, so we want to go out for a whole year. So let's go out to March the 20th of 2026. We're going to be buying a call. This is the current striking share price, which is $89.52. And this is greatly undervalued, so you know it's going to go up. It should be at least be $100. So I have this particular strategy on my watch list. So let's look at it. We hit that. It has 23.18 or 21% chance of profit. Right now it has zero interest, but it has 818. It has zero volume, but it has 819. They're all interested in it. And it's a high volatility, as you can see. It has a delta of 59.70 and a theta of 0.348. If you are not sure about it, just add to your watch list. And then when it comes up, you'll see what it's doing. And if it's doing good, then you can just decide then whether or not you want to invest in it. But this definitely gonna go back to $100, and probably gonna be sooner than a year. But you want to go at least a year out, a leap. You want to put a leap year out. So let's hit buy and see how much this will cost. And so you would go here and you put a 1 there. And you go here and you put 3.25. All right. We'll go down here and hit the break even column. And it costs you $2,000. And don't panic if it costs you $2,000. It's gonna cost you $2,000, $2,300 some dollars. Anything from the black dot to the red dot is your losses. Anything beyond that, you do not have to worry about it because you did not pay but $2,300. On the black dot, going forward to the green area is your profit. And so this particular stock will cost you $2,000 in order to implement it. And your profit could be unlimited. Unlimited could be anything. It can be $5,000, it can be $10,000, it can be $20,000. And so you will hit review, and then you'll implement this particular strategy. I'm not going to implement it right now because I'm not ready to spend $2,500. I know many of you are not either. And so for those of you that are in this position, you can do this, and you can even double your value by going up here. Instead of putting a 1, you can put a 2, 3, or 4. And now you double your value. Now it's estimated cost $4,650. Let's hit the break even column. Because you're only paying $4,650. That's all you can lose. This is your this is insignificant area. From the black dot to the green area is your profit. It can be unlimited, it can be anything. You hit review, and then you submit. I can also do this. If I was to implement this particular strategy, it would release $4,000 that I have in collateral. But I'm not going to implement this. This is just for education only. I already have my strategies in place on this particular stock. Okay, this is why I realized not many of you are in the position to spend $4,000 or $5,000 in the stock market. And so now we got remedies for that too. Let's go here. Let's go here and hit 100. This gives us a delta of 59.77. Theta of 0.346. Has a volatility of 67.05. Chance of profit 23.21. Volume 1. Open interest of 18. Well, what we're going to do, we're going to go here. We're going to hit buy. Hold on, we got to change the dates. Because this particular strategy here, we want to go 30 days, 60 days, or 90 days out. So it's being March. let's go. Let's go 30 days out. Let's go to April the 11th. Okay, we're going to hit a buy, and we're going to hit call. Current striking point is $89 and 11 cents. Well, $88.75. Keep moving so fast, as you can see. So in 30 days, we're predicting that it's going up in value. I can't even put in strategy fast enough, as you can see. So 30 days, we want to go, let's see, we could go, just say, we can go, just say, 92. 92 gives us 28 chance of profit, 48. 89 delta, volatility of 68, 76 volume, open interest 5. And so we're going to click. We want to right click on this. So you're right clicking on it. Instead of going over here and hit this, we're going to right click on the plus sign. That tells the system that we're going to be adding to this. Hold on a minute. Still I'm doing this wrong. You want to hit sell. So you can hit sell call. Sell call. Okay. Now we're looking better. Sell call. And we want to hit 92. We're going 30 days out. Chance of profit is 70.76. Volume of 7. Open interest of 5. Volatility of 69.28%. Delta of 50.90 or 50.80. And so what we're going to do, we're going to be hitting the plus sign because we're telling the system that we're going to be adding to this. Then we're going to go over here and hit. Let's see, did I do something wrong? Okay, we're going to go over here and hit buy. Wait a minute, I think I did something wrong here. I messed around, hit the date thing for some reason though. Doing this on a cell phone sometimes sounds kind of difficult because it's when you're a man, you have big fingers. So we'll start all over again. This is share price is the 89. As you see, it's already at $90. Wow, it's moving really, really fast. So we're going to hit sell and call. And we can go to, actually we can go up to 100. Yeah, let's go up to 100. We're gonna hit that like that. The delta is really low on this though. Why is the delta so low? Let's see. Let's go to 97. A little bit better delta, 23. Chance of profit 82.27%. Has a volume of 2,469. Open interest of 7,439. Volatility is 90. And you can add it to your watch list so you can implement this particular strategy. So if we're going to hit plus, and then we're going to go back up to the top, and we're going to hit buy. We're going to go one leg under the 97 and hit another plus sign. Then we're going to go back up, hit sell, and then we're going to hit put. Then we're going to scroll down, until we see the current share price start to move. It's at 90.07. We're going to look at 90. 90 is a 48.66 delta. Theta is 41. Chance of profit 63. Volume is 1944. Open interest 3,337. That's a really high volatility too, as well, as you can see. And so you will hit a plus sign there. And then we're going to go back to, I keep doing that. Thing don't want to work out this morning. Shit. Okay, let's start all over again. Okay, hold on. My phone done froze up. Okay, we're going to start all back over. My phone was acting crazy. So we'll hit trade. We'll hit trade options. And we want to go out at least a whole month. So we're already in the month of March. So we want to go to April. So we want to go at least 30 days out. We can go 30 days out. We can go 60 days out. The max for a 9 door is 90 days out. And so let's go to April the 4th. We're going to hit sell. We're going to hit call. This is the current striking point, which is 88.25. And so we know we're expecting for, since this is a call, that means we're expecting for this particular strategy to go up in value. And so let's go for a 92 call. It gives me a delta of 47.33, theta of 0.11, 90, which is a high theta. Chance of profit 72%, volume of 7, open interest of 39, and a volatility of 71. You can add it to your watch list, or you can implement this particular strategy. Again, this is called the iron corridor, and you can do this or place this particular strategy in as many companies that you are interested in. So you go ahead and right click the plus sign $5.90, $5.55. Because this is the options, you multiply that times 100, so that'll be 555, or 600, or 520, 520, or 480. And then we're going to go ahead and hit buy and call. We're going to go to one leg down and hit the plus sign there. We're going to go back up and hit sell and put. Then we're going to go down until we start seeing the share price move. It's at 87.52. We're going to look at that. It gives us a delta of 43.65. It has 66.16% on it. Chance of profit, 3 volume, open interest 16, volatility 7, theta 10.71. If you're afraid to implement this, add it to the. If you're afraid to implement this, just add it to the watch list and just watch it. Once it becomes value, then you can buy it. And so what you do, we're going to go here and hit the plus sign. Then we're going to be adding to this as well. So we're going to go back to the top and we're going to hit buy. We're going to hit buy put. And then we're going to go one leg down, which is here, 86. Gives us 42 delta. 36.25 interest. It has 1 volume, 32 open interest, volatility is 70. we're going to hit plus sign. When we're going to go out here, we're going to hit that session now. And this is what you call an iron corridor. Hold on, something ain't right. Okay. I ain't got it straight. As you see, it's a lot of movement, a lot of volatility in the market. That's why you see all this stuff coming up on the screen. It's very distracting too. But again, getting back to this iron corridor, we're going to hit sell and call. That's what I'm saying. So much stuff happening this morning. You can't even implement your strategy because all this stuff jumping up on the screen. Good grief. Again, we're going to go to Pioneer Technology, and you can do this strategy in any company that you have in your portfolio. You hit trade options. We're going to go up to April the 4th. We're going to hit sell and call. This is current striking point. It's 86.92. So we're expecting for this to go up in value. So we're going to want to go at least, we think at least go up to $90. We click on that. It gives us a 48 delta. Chance of profit 71.10. Volume is 174. Open interest is 935. Volatility is 770. So we're going to hit the plus sign. Then we're going to go back up here and hit buy and put it. Be careful and not make a mistake like what I did. Hit the date sign, and you get to hold everything all out of rack. So we're going to be adding to it. So we're going to go one leg up, which is 91. We're going to hit the plus sign, 91. We're going to go back and hit sell. Then we're going to hit put. Then we're going to scroll down. This is current price. Current price is 87.31. We can left click it. It gives you your stacks. Delta of 44. Theta of 10.88. Chance of profit is 62.79. Volatility is 71. You can add it to the watch list, or you can implement this particular strategy. You hit your plus sign. That's $695. So that's $700. And then we're going to go back to the top. We're going to hit buy, put, and we're going to be adding this leg just below it. We're going to go out here and hit this section here. That's what you call an iron corridor. And you can implement this particular strategy in any company that you are interested in. This is a great see, this thing is moving so fast now. It's really not working out. I'm working this morning. You can't even get the full stacks. But I hope you get the gist of what I'm doing, because this is just not working this morning. Like it's not even pulling up the profit from this. Maybe I should go and try another. Let's see, hold on. Yeah, this is not working this morning for some reason or another. So let's go and try another company. Because the thing about doing the iron corridors is that you could implement that in any company that you want. And what I'm trying to show you guys is that you do not have to have big money in order to implement these strategies. If you was to buy Just say you want to buy, well, no, let's not do that because we're only doing 30 days out. I was going to tell you, since Pioneer technology is so undervalued, that you can put what you call a leap in. And like I said, a leap is a leap call is a whole year out. And so you want to go to March 2026 in order to do this leap. And say you want to do 100. And see, if you bought this would cost you $2,000. So that I realize some of you may not have $2,000, so you want to do what you call an iron quarter door. And you can do an iron quarter door in any company that you are interested in. And basically you'll hit your date. You want to go 30 days out. I'll wait till that clear up. You want to go 30 days or 60 days out or 90 days out for maximum for an iron quarter door. Since we're already in March, let's go to March. Let's just go to March 11th. You're going to hit sell call. Current cracking point is 86.58. And you go up here and just say we could expect them for it to go to 90. We'll hit the plus sign. And then you go back up and hit the buy sign. We're going to go one leg up to 90, 91. You hit the sell sign. Then you're going to go ahead and hit put. You're going to scroll down to 86. Boy, this thing really jumping this morning. And then you want to go just out of the money. And you want to hit the plus sign. And then you want to go back up to the top and hit buy. And go one leg down. Hit the plus sign. You want to hit this. 9's popping up like it's supposed to. You want to hit this. This is your break-even column. So you're only paying, let's see. You only lose $85. So you only lose $85 for this. $85. This over here is insignificant. This is insignificant. Market moving so fast, I can't hardly do this. From the black dot to the green dot, it's your profit. That's $30. This is insignificant. From the black dot to the green dot, $30. So that's $60-some. You say, well, that's not a lot of money, but you go ahead and click review. And then you go up here, instead of putting 1 in, you can put 2 in. Or you can put 3 in. You can put 4 in. Or you can put 5 in. And now your value increased. Your value increased down to $539.20. So we go here and you put in this price over that you see over there that say limiting price 0.05. And then that's high. Let's say high likelihood. Estimated credit is $24. You hit review. And then you implement this particular strategy. It's called an iron quarter door. This one cost me $500 in collateral. And so you have to make sure you have that in your portfolio to implement this particular strategy. So this is an excellent way to build up your portfolio without having to come up with a whole lot of money. And you can implement this on any company that you have in your portfolio. I already have this, that's why I didn't go through with it. So I have, here it is right here. See, iron corridor. And right now it's in the green. And so yeah, this is it right here. And you can implement this strategy on any company that you have in your portfolio. You can do it in Tesla. You can do it in Facebook, Board and Outline, Goldman Sachs. Whew, boy, look at the price of that. $625.12. And let's see, Apple is down this morning, $1.02. You can also do an iron corridor and Apple. An iron corridor is a good way to build up a small account. If you have limiting funds, you can use the iron corridor in order to build up your portfolio. And you can use this method as many times as you have the funds available in your portfolio in order to build up a small portfolio into a big one. And again, it's called an iron corridor. And you simply hit trade. You hit trade options. You go up and select your date. Usually you can go weekly or bi-weekly. But the longer you go out, the better, the more profitable the trade will be. So you want to go at least 30 days out. None of that weekly or bi-weekly stuff. It's not enough time. You want to go at least 30 days out. Preferably 30 days. Preferably 6 days out. So it's March now. We'll go out to say March the 4th or either March 11th or March 17th. The further you go out, the more profitable it becomes. And you're going to hit sell and call, and you can implement this on any strategy or any company that you have in your portfolio. And it means that you're expecting for it to go up in value. It's an excellent way to buy a option and not have to pay full price. So it's a sell call. It's currently $240. In a month from now, hopefully it'll go up to $245. So we'll look at $245. That gives us a 44 delta. It gives us a 70% chance of profit, 18 volume, 583 interest, and a volatility of 24. Volatility is pretty good. It wasn't like it was Palantir going freaking crazy this morning. And so we're going to be going over here to the plus sign, and we're going to be adding that. When we hit that plus sign, we're telling the system we're going to be adding to it. So we'll go back over here and hit buy. Then we're going to go one leg up, and we're going to hit the plus sign now. Then we're going to go back and hit sell and put. We're going to go below the striking point, because now we're expecting for this part of it to go down. But it's going to be out of the money because it's the put. So we'll click on that, left click that, and it gives you your stacks. Delta 45, theta of 0.89, chance of profit 65.75, volume of 7, open interest 22, volatility of 25. We're going to go back at the plus sign. We're going to go back to the top, hit buy, and put. We're going to go one leg down. You can hit the stacks again so you can get to see what you're going. That is 35 delta, 0.89 theta. Delta is the profit that you'll make off of this trade each day. You make $35.06 a day. The theta is low. The theta can eat up at your profit if it's on a real long way out. If you have a high theta, it's going to eat up at your profit. This is low theta, so we're okay with that. Chance of profit 29.32. Volume of 111. Open interest 245. Volatility is 26.73. And so we hit the plus sign there. We're going to go out here to that section and CSX. And that's how you know what you just did. You implemented correctly. Because it's going to say iron corridor. If it doesn't say iron corridor, then you did something wrong. 350. That means $350. You go down here to your break even column. And this is your losses. You're going to lose on this leg 150. Anything beyond that is insignificant. This is your profit on this leg 345. This here is insignificant. And this is your profit on this leg, which is 350. This is your loss on this leg 150. Again, this is your profit. That's two legs. This is your profit. And this is your profit. And so you'll hit review. You can put 1, 2, 3. Your max profit on this particular leg is $395. You can put a 1 down, or 2, or 3. This is going to be a credit of $394. You can put a 1 or 2, however many contracts you want. You go out here and hit limited price. Starting at $360. So we'll type in. Let's go $395. Okay, so it went accept like $395, so we go $360. High likelihood. And so you'll hit review. And then you'll implement this particular strategy. Again, this is called an iron corridor. It's an excellent way to build up a small portfolio if you have limited funds. It will also give me 500 collateral. I have to use $500 in it and collateral. And so, as you can see, Apple is down this morning by $1.46. I have 4.6 shares of Apple, valued at $1,112. If you do not have the funds to implement these options are an excellent way to grow a small portfolio, and you can use it by doing iron corridors. If you don't do it that way, then you just have to buy stocks. You're going to just buy, and you put in the number of shares that you want. This particular share, just say you want 1 share. It's gonna cost you $240, and so you just hit review, and then you buy 1 share. You have that 1 share in your portfolio. Same thing if say the market is down like it is now, it's continuing to sell off. You can do the same thing with put. You hit trade options. The name of the game is to make money no matter which way the market is moving. And so we go 30 days out to April 11th again. And instead of this time, we're going to be We're going to be buying a put. And so the current striking point is $2.40. And so we just look at this. This gives us the 45 delta. It's kind of a high delta. Let's see. So let's go into the money. If it goes into the money, that's going to give us even higher delta, which is 46. Let's see. 45. $45.79. That's 45. Okay, it's at 40. So if we was to implement this, there's 34 chance of profit, with a volume of 7, 22 interest, volatility 25, 46 delta. So you will hit buy. You'll put a 1 there. And you'll put 7.45. You want to make sure it's a high field likelihood. You go out here, actually make more money doing these puts than what you do doing a call. This is this insignificant area from the black dot, or from the red dot to the black dot. It's your losses. You're only paying $745. So this is your losses. This is your profit area. And yeah, it can be $23,255. And so you'll hit review, and then you'll implement this particular strategy. And you can place a put in any company that you have in your portfolio, and especially like now when the market continues to sell off, because some of you want to sit on the sideline because the market is doing what it's doing, and that tells me that you have a limited knowledge of how to trade in the market. That's why you're sitting on the sideline. Even with that, even if you do not have the knowledge or education to do all these things, just simply buy. You know, this is $2.40. You just simply buy it. And you buy it and hold on to it in your portfolio. You buy as many as you can, because what you're doing, you're buying when the market is down. That means that this is on sale. When this goes up, this could be $250, it can be $260, it can be $280, it can be $300. And then if you buy and it's $300, it's gonna cost you more money. It's gonna cost you more money. But for some reason or another, when you guys see that stuff is on sale, you panic inside. You don't want to buy. When that's the time, you should be loaded up in your portfolio. This is the time when you should be loading up, because stocks are cheap. When you hear about a sale going on at some store, you run to that store to get those sales. But for some reason or another, when a sale is going on in the stock market, all you people just stop buying and just sit on the sideline and saying stupid stuff like the market ain't doing so good right now. You know, when really you should be making money, whether the market is going up, whether the market is going down, whether the market is going sideways. It's always a way to make money in the stock market. And when I hear that, that tells me you do not know what you're doing. When I hear about you want to buy Bitcoin, and that tells me as well that you don't know what you're doing. Because Bitcoin follows the market. You want to buy Bitcoin, you might well be buying the market. When the market is down, Bitcoin is down. When the market is up, Bitcoin is up. I hear all you guys saying that. Look at that. Look at that. I got very little crypto. The market is down. Crypto is down. Even Trump stuff is down. It's down by $1.10. Start out when it first come out 28. Eventually it's gonna go back up because this is Mr. Trump. Of course it's gonna go up. Yeah, he's president of the United States. It's going to make billions of this. Because you people y'all see stuff like this, man, that go red, y'all panic and go sit in the corner. Tesla is down. It's a wonderful opportunity now to get some Tesla because it's cheap. I own 11 shares of it. When it get to be $400 and $500, $600, $1,000, not only are you gonna miss out on the gains, it's gonna be too expensive for you. But see, y'all ready to go spend y'all money on cars and fancy apartments that you can't afford, which is crazy. You build up your portfolio first. Once you build up your portfolio will pay for your car. Yeah, your portfolio will pay for that car. This $21,500 that I'm gonna invest. This is liquid cash I can pour out. Not getting another buying power of $5,885. That's not even true value of my portfolio. This is giving you an idea of true value of my portfolio. A couple of weeks ago it was up to 80,000. Right now it's at 61. And this is my profit from just for the month of February, up 0.26%. Pioneer Technology. My profit, Pioneer Technology, $4,603. See? And I show you this to show you that this works. And you can build this up to 100,000, 200,000, 300,000, 400,000, 500,000, 6, 7, 8, 9, 10. $1 million. Who can't live off $1 million portfolio? You can ball out with 200,000 or 300,000. Okay, this is your morning brief. March 3rd, 2025. The U.S. Stock market is rising amid optimism over retail earnings and tariff development. Today in the U.S. stock market is experiencing positive trends with major indexes showing gains after a volatile week. Key things impacting the market includes the implementation of tariffs on Canada and Mexico. which could affect trade dynamics. Investors are also focused on the up-and-coming February non-farm payroll report, expected to show modest job growth. Retailers' earnings from companies like Target and Costco are under scrutiny as they will provide insight into customer spending. The technology sector is performing well, driven by gains in major tech stocks, while defense stocks are rallying due to geopolitical tensions surrounding Ukraine. And you got up-and-coming events on 304 tariffs implementations. The new tariffs on Canada and Mexico could significantly impact trade relations in market segments. 307 non-farm payroll report. This report will provide crucial insight into jobs growth and economic health, influencing investors' confidence. And then at 310, you have retail earnings reports. Earnings from major retailers will shed light on customers' behavior and spending trends affecting market dynamics. And what's happening in the market today? Tesla sales declines across Scandinavians as Musk faces tests of brand. Tesla sales in that's a tongue twisted down. Scandinavian. Well, I can't really pronounce that. Well, it fell sharply in February, encoding its market shares amid rising competition. This decline is significant as it reflects potential challenges for Tesla brand's loyalty and market position. Must embrace of right wing. I lost my place again. Let's see. Okay. Elon Musk embraces of right wing politics, risk turning off car buyers and sinking Tesla stocks. So his love of politics and he being in the White House is tanking his sale for his company Tesla stock. So he's gonna have to do something. He's gonna have to do one or the other. He's not gonna be able to do both. He's going to sacrifice his company. Elon Musk's political stance may be impacting Tesla's sales, which plunged 45% in Europe in January. This situation raises concerns about the company future performance in investor segments. let's see, Metal, formerly Facebook, to launch a standalone AI app in 2025, competing with OpenAI, Google, which Metal plans to launch a dedicated AI app in Q2 2025 to compete with major players like OpenAI and Google. This move is crucial as it positions Meta in the rapid growing AI market. Microsoft just handled IPO prospected in your ANDURIIL, can't hardly see that, a $22 billion opportunity. Microsoft potential contract with Annual could lead to significant opportunities for the defense tech companies. This development is important as it highlights Microsoft's influence in the defense sector. And let's see, Warren Buffett had sold over 950 million shares of Apple in Bank of America. Warren Buffett recent sales of shares in Apple and Bank of America raises questions about his investment strategies. This news is significant as it may influence market perception of these major companies. And so that's going to do it for your morning brief. And that's going to also do it for today's video. We are down this morning $400 and some dollars. And like I tell you guys always, time in the market beats trying to beat the market. You use options in order to continually to build up your portfolio. Then if you cannot afford these options, just do regular buying and hold of these equities. If you buy and hold these equities on a regular basis, they will go up in value. So we thank you for watching. Hope you have a blessed day. Be safe as you go back and forth. And we'll see you again on Tuesday morning at the opening of the bell. And again, we thank you for watching.
Self-confidence is your superpower. Believe in yourself, even when no one else does. Face your fears, take risks, and embrace challenges. Every step forward builds your strength. Speak with conviction, act with purpose, and trust your abilities. Confidence is built through action. Stand tall, be bold, and let your inner strength shine. You've got this. Own your greatness.